Hello, friends, and welcome back for another episode of Technical Analysis with me, your friend Rocky Outcrop. Today's episode is going to be called Snappy Saturday. I'm trying to keep things, I don't know, it's probably about 12 minutes in total or 13 minutes in total if you exclude this intro and the, I don't know, you'll see. It'll say down there on the thingy how long the video lasts for. Today we talk about entries, exits, targets for Bitcoin and Ethereum, and I also try and talk about the wider market in general and how you can add another sort of product to your trading analysis to help give you a more holistic view of the market, which is a really good thing to do. It applies in traditional markets as well. It's kind of how things are done, so it's good to incorporate these things into your trading. And what else? Well, that's basically it. So stay tuned for all of that. I've got entries, exits, everything for all the different things. I've got toothpaste on my face throughout. Oh my god. Well, I'm not refilming the video. I apologise. Let's just go into the charts and try not to take too much. Don't try not to be too annoyed at me. Try and keep it all within 10 minutes and discuss everything we need to discuss. Going to try and keep everything really quite relaxed as well today and not get too bogged down in any particular thing or look at too much detail on anything. Now, okay, what have I got up behind me? It's a little bit different. And if you want to add it to your go away notification, if you want to add it to your own charts, of course, as a favorite, you can go over here and type in GBTC and you can add it as a favorite there. And if you want to, you can obviously find it here, GBTC. This is the Greyscale Bitcoin Trust, okay? And I tell you that tip there about adding it to your charts. There's a whole host of tips like that that'll make your trading life so much easier. So I highly recommend, maybe after you've watched this one, if you're looking for something else to look at on Saturday, this is a good thing to look at. TradingView, the TradingView tutorial series by TradeSpotting is in the description below. There's a link to TradeSpotting. Go check them out. It's great. It's good channel. Now, okay, so here we are, and what is the Greyscale Bitcoin Trust? Well, the Greyscale Bitcoin Trust is essentially a fund that you can trust. Why call it trust? Well, I think they're just trying to. Well, you can see actually, they started in 2015, and this is one of the first products that the investment for that was launched as a vehicle for institutional money. You could say, sort of, to get involved in Bitcoin. You can see over here, and now they're one of the biggest holders of Bitcoin, and it's a good way for people to get invested in it if they want their sort of pricing to be managed in the more traditional way, using things like cap stock and whatever else to come up with a price for the product that they're investing in. And I'm not going to explain the details there or what I mean by that. All I'm saying is that it's a part of the ecosphere. As time goes by, it will become just another fund out there. Now, you've got funds that can do various things. Say you want to invest in green products, you could invest in energy, windmills and whatever else. If you wanted to invest in automobile companies or arms manufacturers, there's actually unethical trust specifically that you can invest in if you want to. And there's an ethical trust, which are supposed to not have any investment in companies like Halliburton. Having worked with those in the past, I would say scrutinize them in great detail because a lot they're not. Anyway, we'll not get into detail about that. But right. Anyway, this is part of the overall ecosphere for Bitcoin, and when you're doing any sort of trading, it's always good to look at the overall sort of everything, all the different factors involved. So if you were looking at investing in oil, you'd also want to know how things like how well different shipping companies or petrol stations are doing. You might even extend that as far as looking at how war, things like that, and if you're looking at investing in Halliburton or whatever else, you might be looking at different things like that. Okay, so for instance, in the Bitcoin world, you have things like this, and it is kind of becoming superseded in a way by other features out there in the market in terms of products for investment vehicles for institutions with things like backed and stuff like that. And of course, this is a fund. I believe this isn't exclusively Bitcoin, although it might be. I think they've also got an Ethereum one. They did change their makeup of what they'd actually what constituted their fund or their portfolio or their whatever recently, like 6 months ago or something, year ago maybe. Eventually this will just become yet another fund, and there'll be other funds out there and it'll be less relevant. But because this is one of the older ones, it's certainly the biggest one, and that's it's worth looking at to see how things are doing. So you can look here, and this is just, I thought I'd tell you how to have this on your charts and remind people that it exists if they'd forgotten about it, and point out little things like how it can get gaps on the daily charts as well. It does a normal working week for trading as well, so it has weekends off, so you see big gaps here. Now it has gaps much more frequently than the CMEs do, which is partly as a function of it being traded much less. It's ultimately it's going to become, it's probably in the next 5 years, I'd say that this will be that its relative size to the overall market will probably diminish, and thereby its importance as well to some extent. But that's a prediction on my part. That's just using my own experience from this sort of industry. But however, it's really good. It's really worthwhile looking at. But there's certain aspects about it you might want to know. Like, for instance, the gaps on here don't necessarily get filled right away in full, which is kind of interesting. How you can see, like, this one here kind of pretty much did, but didn't quite. And that's something that seems to happen quite a lot with this one, whereas the CME chart tends to fill them a lot better. You can see there's a gap here, and then it got filled nice and easily there. This gap here then sat on the charts for a while, and look at that, it didn't quite get filled there, and it was sort of made up the rest of the filling over here. And like, we've got a gap down here as low as 8,600 or 8.6 over here for this. Now, the way that this is priced is totally different. I tend to think of this is sort of like the 24-hour clock, in the way that you're going to have to think about things a little bit differently. So you can see here the prices are around 11 something at the minute. In the previous weeks they're around about 11, then 10, and things like that. If you sort of take the number here, turn it into the thousands, take 1,500 off or so, then you can kind of get a spot price more or less out of it. But that's not what this is about. This is actually more about looking at things like the trend. You can see that we've got this pizza slice here, this wedgie type thing on the daily chart on here. Where do you want to draw it from? I always talk about how these things are subjective and therefore variable in terms of their interpretation, and therefore the usefulness of them is somewhat diminished. So we'll take it from there, shall we? But you can see that there's a sort of correlation there, if you want to, between that and the price of Bitcoin in general. Now, if you sort of suppose if we take this as a sort of general look here, and then go over to the spot prices, you can see that they're not a million miles away from each other in terms of the shape. Okay, so that's something to look out for, something to add to your armory. Might make your trading life a little bit more useful, or your time spent trading a little bit more useful, if you're sort of looking for different things to analyze. And of course, then you've got the Bitcoin CME futures chart, which came around much later than the GBTC in terms of its existence. It only started existing at the very peak of the market. I'm not going to show you. It's back whenever, remember 20K Bitcoin prices? That's when it started. And then of course it was a really great place to short Bitcoin, and that's what happened for the whole of that year. And then they expired at the end of that year, and people thought, well, that was the right decision. So what we're looking at here anyway, in terms of the prices and how Bitcoin has performed, and what we were celebrating or hoping for yesterday in yesterday's video, was that the price would end above 9,700 or so. There's the 9,700s there. Well, we did it. They did it. The price is around 9,850 or something like that. It ended. Oh yeah, it says it here, 9,845. Right. Okay, we'll take that as the closing price for that. So that kind of means for us that if you were looking to avoid any gaps on the chart, or to know that we didn't have any external sort of additional pressure coming into the market, like a gap. See this gap here? It was filled. But there's still a gap down here. That's got a correlate confluence with the GBTC gap as well. This is something that I'm keeping my eye on in terms of the longer term. I feel like they could come down and fill this, but of course it could live on the charts for forever, basically, and get filled in 2 years' time. It doesn't have to be filled today or tomorrow or this week or this month or this year. There's no time, there's no expiry on when that happens. It's not really like that, but they tend to happen, sooner, before the market takes off. So would I think that we could actually come down here before all of the different stuff like the halving in impact and the next massive bull run happens? Yeah, we could, and I'd bear that in mind. And trading, like I say, in pretty much every video, is primarily about risk management, not really about choosing like, oh yeah, we're going to go 100,000 this year. Clickbait, 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 clickbait. No, that's how to be a YouTube analyst. That's what that is. So don't conflate the two things. How to be a trader, which is very different, is to manage your risk exclusively. That's basically it. And so bearing these things in mind, knowing that there are potential, if the price was to go down and want to fill that gap, where would you be looking to get out at? And back over to the spot price, so we can talk about that real quick. We'll go and look at Ethereum and wrap this thing up, because like I said, I want it to be under 10 minutes, or I'll take 12 minutes because I've got an intro and then there's the music and all that sort of jazz. Go away, and you can install those updates tomorrow. I like to hit that remind me tomorrow every day. I don't know how long I've been doing that for, maybe about a year now. Right, okay, this is going to delay me. Notifications off. There we go. Great. So back in with the video. And yeah, this is basically what we're looking at here. Can we get above this 9,850 level? That's what we're looking at. If we can, then we can go up and we can try around the 10,150, 10,200, 10,090, whatever it would happen to be around there for that 50% retrace. And we would probably get rejected off that on our first pass, in which case, if you're looking for targets and entries and exits, you'd be looking back down here again, the 875. The question in the meantime really is, will we get another entry in around here at 9,550 or so, in which case the giveaway account, which you stay tuned for future videos if you want to get a free funded Bitcoin account. I'm giving one away, so make sure that you like and subscribe for that. Then there you go. That's where you'd be looking. So that's where that order is, and around there on that account. I've not checked it. I don't think it's been filled yet though. So I am tempted to move it up, by the way, a bit, but that's just so that I can sort of I don't know if I should be sensible with that account or not. Being sensible means that I've got long. So if I wanted to go big on a long, or manage my risk or anything like that, the number that I'm looking to manage everything around about is that 950 level. The number that I'm looking at for us to break above is that 980 something level. The target for then thereafter is 10,000. If we were to bust straight through that, I wouldn't necessarily ditch all of my position at that level. Would be up here at the 11,000s, and there's very little in between to stop it. But of course, I say very little, but there's several areas where you could take profit. You're talking 10,600 as being an obvious one. There's an even more obvious one at 10,400. Okay, so I think that's that summed up. I'm not going to look at divergences and everything else. If you want to see that, I've looked at them for ages. You can see my video yesterday where I talk about that. You can look at the one from the day before, and the day before, and the day before, and the day before. They're all still there, by the way. We're still essentially bearish on the 1 hour, 4 hour sort of charts. We're bullish. We're sort of neutral-ish on the daily, I don't know, and then on the weekly and the monthly, we're bullish, okay? Ethereum, here we go. This is the same sort of deal. Like, we're being supported by the 221 line. If we were to break down below that, then you're looking anywhere down to, at the worst, I would have thought, because this is an uptrend and I expect it to continue, would be 190 levels at the worst. And in between times, there's definite areas of the 200s, 202, 4, 5 area. I know the numbers are a bit silly here, but if for something more solid, you've got 210, and the reason why is because the 382 Fibonacci retracement line is there. Of course, there's this very initial line here at 220, and that's that blue line's there for a reason. Let's leave it at that. And in terms of the upside, the first areas for taking profit are the 230, where there's this horizontal line here, 50% retrace at 240, and then if we dare to break through all of that, then there's blue skies up to 266 and stuff. So there's a huge opportunity on the Ethereum markets at the minute for people who are looking at that. And of course, the opportunity is up there. That's not what trading's all about. Trading's about managing your risk, and the areas that you would do it at would, of course, be the 220, the 211, 221, 211. You're looking as it's down there, where the 10 simple is at 198 and stuff like that. That's what you're looking at today. Okay, so that's everything. It's all wrapped up. 13 minutes. All right, okay. I apologize. Wasn't as snappy as I wanted it to be, but right, relaxed and happy. Like, subscribe. Come back tomorrow. I'll do a Sunday supplement, and then we'll see. We'll try and choose some targets for the start of the next week. See you next time.